And I want to start on that note. The best ideas, where do we invest, given the context of that the market is trading in right now? A lot has been said about the fixed income market and the attractive yields. Equities not so attractive given the risk-reward trade-off. But even within the equity space, how's the best way to approach this?
I think the best way to approach it is to contextualize, put it in context, think about a market with an adjusted PE ratio, market average PE ratio of about 12.45, price to cash flows on the average about 3.8, and then from there pinpoint the areas of value. Remember that the market itself, of course, is made up of the bellwether Dangote cement, 1.8 trillion out of 6.7, 6.8 trillion. For me, Dangote cement specifically is, it's not overweight, it's definitely not underweight, it's a whole position. Now, around that core of value, you have also the banks, another third of the market, about 27% of the market. Within that sector, you can cherry pick in terms of trading or in terms of longer term value, the sector leaders.
But can you talk some specifics now?
Yes.
Which ones do you think we should be looking at?
For instance, UBA, of course, there was a profit warning early in the year, but first quarter results, both net interest income and gross earnings up well over 30%. Let's not forget that UBA, as well as its closest competitors, First Bank, Guarantee Trust Bank, and Zenith, all have, I like to describe their balance sheet as having war chests. You have loan to deposit ratios, UBA specifically 45%. What that posits is that these banks, they've been prudent, maybe overly so, but as they go forward and seek returns, then you're going to see those 50 to 55% of sort of suboptimal funds channeled to productive sectors of the economy. So the midterm outlook is very positive.
I imagine in picking stocks right now, more so because the fixed income market is so attractive right now, dividend yields must be key. Is that something that you are focusing on as well? Dividend
yields are key, as an anchor. And in that regard, again, there's quite a bit of value to grasp. O&O, another sector leader. It's funny where you have, stocks that should ordinarily, blue chips that are ordinarily sector leaders, trading with low multiples, well below 10, one or two of them even below 5 times, giving tremendous potential. O&O has a dividend yield close to double digit, so does Guarantee Trust Bank and First Bank. Maybe there are one or two other smaller stocks that one can look at to grasp that kind of value. But overall, I mean, it's a theme that has constantly been beaten. You're looking at definitely valuations that are very modest.
All right, let's focus on a theme that an analyst pointed out to me earlier, and that's the issue of the oil price. Oil price now down to what I'm hearing is a 16-month low for Brent, which obviously is very close to what Nigeria produces in terms of comparing the price to Bonny Light. Give us your thoughts on the impact that we're seeing of that on the equity market, because there has been a trend where we've seen the equity market do well when oil prices are high and, of course, fall back as it is doing now when oil prices are low.
Absolutely. I think what used to subsist was that right up till, right up till the 2008 March all-time high for the valuation of the market, there was a very tight correlation, to use a term loosely, of the pricing of our Bonny Light flagship blend and the overall all-share index. However, that toggle has loosened over the last, basically since the slide in values. So whilst it's important, it's more of a lead indicator The fact that it's below the psychological benchmark of 100 is important. It probably suggests to us some of the reasons why, as you and David were talking about, trades are at about 1 billion for today as compared to an average for the year of about 2.2, 2.3 billion. But again, it points to the underlying value. On a fundamental basis, our federal government benchmark is at 72 US dollars per Nigerian, crude oil barrel. So $98, which is around where it's hovering right now, is noteworthy, but not overly worrisome. It's not something to be particularly worrisome about.
Final point for me. Let's move to a stock which I think is very interesting. Very interesting trend for Transcore in particular. We've seen that stock rally quite a bit. Now falling back a little bit, of course, some profit taking happening. But give us your thoughts on if you think it still has an upside, some way to go. Because this is a stock that's come way up from 7 naira. It's down to closer to 2 naira now. Give us your thoughts on where it could go.
I think because of its diversified holdings and particularly the interesting stakes that it has in the upstream sector, it definitely has, it will show uptick in terms of top line and bottom line, and that will reflect in pricing. So it's very simple. For those who can do the numbers, they know that there is definitely an upside for Transcorp. And by the way, that also, right across board from like I said, O&O, another company with interesting stakes in the upstream, which is trading at multiples below 7, to stocks like in the real sector, if you insist, UAC, also with considerable upside. I've mentioned UBA, already, significant upside, but quite a way to go when you look at the fundamentals. And right up to, I keep harping on the fact that you have sector leaders that continue to show value. Presco and O&O, the leading agricultural firms, light on liquidity, but very strong on underlying value.
All right, let's come back to the broader market. Hopefully this will be a final point. Your thoughts on its valuation right now? Is it rich? Is it well priced? Because there are new risks to consider now. I mean, there's been a lot of talk about the banking space and the fact that prices there are very depressed, or at least very good value. But then again, there are new risks coming to the fore. There's the issue of the oil price, there's the issue of the naira. Over the last month or so, we've seen more concerns around that. Give us your thoughts on the equity market. Given all things considered, would you still say it's a good play?
Tremendous play. I think it's just a matter of, you probably can't do a broad index type tracking. You just have to look at where the value lies in terms of corporate performance. However, there is a caveat, again, to come to what you and David were talking about. If you look at the overall volatility numbers in terms of absolute, you saw swings of up to about 0.74% in 2010. The last time, the last year, the market had significant year-on-year gains. That dropped to about 5.53, and the year to date, that is being reflected again because there is unease. Obviously, the security situation does not help, and one or two other macro or political developments or upheavals. Yeah. But when it's down to the corporates, there is a lot of good value to be.
In terms of risks, clearly a lot of things to consider in Nigeria now. You just mentioned, obviously, the political situation, and of course, the terrorism attacks that we've seen recently. Funso, it's great to have you on the studio.